Right, this is the first video. Oh, my bad. Yep, right. This is the first video. Hello, Aisha. One sec, let me sort my screen. There we go. So, right. It's currently 3:39 UK time. This is the EURUSD, as you can see, and basically, I want to explain why I changed my bias. Because yesterday I was yesterday I was bullish overall, but some things happened today, Monday, that made me change my bias. So I'm just gonna mark out the days. This is midnight, obviously. Right, this is Monday, and then we also want Sundays open, don't we? So up until let me go on the daily to show you what's going on. Up until today, I was bullish, thinking that these highs were going to get run due to the fact that there's still liquidity resting above here and a gap. However, I looked on the weekly, and I realized that we've already taken out this high here, so this would be considered a sweep of equal highs, you know. There was that changed, that started added to my reason for why I was bullish. Also, so this is the 4 hour. Let me explain it from the 1 hour what happened, which changed my mind. So before here I was like, okay, first of all, did what I expect to happen? Yes. I expected these highs to get taken out. This is Friday. I wanted to see these highs get taken out, and I said that it could trade to here. So yeah, I said I want to see these highs get taken out, which they did, and then I said I anticipated that it could reach up into these. It was unlikely that it was going to reach into these, purely because these highs are so close to each other, but I did want to see this get taken out, and that's what happened. What made me change my mind from my bullish stance to my bearish stance was this swing here that got created. So a swing low got created on Sunday session, and then this got swept by this, taken, and then we attacked these highs here. So now that this swing low was created and it's got taken out like that with such momentum, I've now become bearish, and yeah, there's loads of reasons why I'm bearish. It's left a fair value gap here. There's a lot of liquidity resting down here, and when I say bearish, I was expecting price to come down to here regardless, but what I'm saying is I'm now heavily bearish. Like, I'm bearish down to this swing low. That's the difference now, because yeah, I want to see this low get taken out, whereas before I only wanted to see it trade into this order block, but now I want to see price get through all of this and take out this low. Right, let me jump back to hourly. So that all played into it. It's the last significant swing low, and obviously there's liquidity, so there's every reason for me to think it goes low. I think there's going to be a perfect entry today, on Tuesday, that is. That's going to get made around how long have I been talking? 5 minutes. Okay, cool. Yeah. Now, this is where my advanced analysis starts to come into play. So what I did is I've marked out the open from Sunday. Sunday should be 5 o'clock, not yeah. So I marked out the open from Sunday, which was here. I like to make that red dash 2 pixels, 25%. Right, so this is Sunday's opening price, and we see our price, consolidation, expansion, and then we start to move lower. I want to see price tap back into this one more time before saying bye bye, which is where obviously this comes into play, and we can also take into play Monday's opening price, which was here. And referring to these opening prices, I never used to do it as much prior. I don't know why. You know what it is? Probably because I'm seeing where it's relevant now. But I know that price is gonna price responds to the high, the low, and the mid range of candles, right? So this daily candle, this is the high, this is the low, and then the middle should be around here. So I also get that drawn out. Let's come up. Let's change that to trailing range. And would you look at that? So the midpoint of Monday's range is also Monday's opening price, which again adds to my, what's the word? Anyway, adds to my reason as to why I think that that's why I think price is going to return to this level, and why I think it's going to be a perfect sell. So there's that as well. So what have we got? We've got above Sunday's opening price where we're now bearish. We've got Monday's, we've got Monday's opening price as well, which is in the fair value gap. And we know that price refers to these levels. We've got relative equal lows created down here, which again is creating liquidity, let alone all of these lows that we've still got to collect. And here just recently in Aiesha, we've created a beautiful swing high, and we're just taking out this swing low. So where are we heading for now? Swing high. So what am I expecting? I'm expecting price to open, maybe drop down a little bit. Well, not even drop down. I'm expecting price to open, take out these highs straight away, and start working its way into here for London. So now would be a perfect buy, to be honest, but I'm not in a rush. So yeah, there's a swing high, and I know that after this swing high, what we're going to be looking for, sell side. So this is all on the hourly, and I'm seeing all that on the hourly already, which says enough. I do think price is going to drop back down into its order block before open, and then work its way up here. So like, I'm getting a bit too precise right now, especially for the especially since like there's going to be people watching this probably years from now thinking that right, anyway. So yeah, that's basically my stance. Do I think this is going to go any lower in the Asian session? No, I don't. I think that price will open, take down this low, take out this low, take out this high, and then obviously, take out these lows. That's what I want to see happen. But it doesn't really matter if it doesn't pan out, because regardless, as in pan out that within that method, because I'm not trading, but because of how price books and because of my understanding of how price should work, I'm expecting it to do something like that. But anyway, let me continue explaining why I'm also bearish. So there's that. And then there's also the central bank dealers range, which I haven't used in a long time. And you know, remember that time when I first discovered it? It's on the 2016 mentorship. I think it's like one of the last months. And I remember being obsessed with this central bank dealers range. That is from 2 p.m. to 8 p.m. I believe. So let's mark that out. Don't mind me just munching. 2 p.m. we'll make it this green, sorry. 2 p.m. to 8 p.m. Because it's not actually a trading range. Well, it is a trading range. It's just central bank dealers range. But I'm gonna make it so what you do is you mark the low and the high of that range. And I'm going to use a standard deviation. Sorry for munching, let me try this one. let me mute myself while I'm munching. What's that? Right, so there's a central bank dealers range marked out. What you're supposed to do is you're supposed to split it in half, and then from half of it you work out how many standard deviations up, and then you're supposed to double it down, purely because, so like what, yeah, we can do that, but it'll be the same thing because it's just maths. It'll be the same thing if I just look at the whole range. So if I'm expecting this to be 1 standard deviation up, it means I'm expecting this to move 2 standard deviations down. So because this is let me show you. You know what, Aiesha, you probably understand exactly what I mean. Like, you probably know what I'm doing here. But I'm gonna make it like this because this is how I learned to understand what it is. This is 1 standard deviation. So this, which happens to be in, you know, my Monday's open, and the fair value gap, which I'm expecting price to return to. This will be 2 standard deviations. So that means I'm expecting it to move 4 standard deviations down. So I don't know if you remember this from maths. I don't know if this was even taught at GCSE actually. I remember learning this. I don't know if it was at A level or if it was at GCSE, but this I remember looking at standard deviation. So maybe that's made this a lot easier for me to understand, and I don't even realize, or not. But anyway, how many did we say? If it's 2 up, we're expecting 4 down, so 1 and 4 would be 5. 1, 2, 3. 4 and 5, which happens to be where that daily low I marked out is. So like, these are all the things which I'm taking into consideration now, and And like, it's mad because when you first learn them, you go in and look for them and apply them straight away. But it that's clearly not worked for me. Like, you have to see it yourself. Do you know what I mean? Like, it's being able to apply it. I'm not gonna bother doing that, but you get the idea. So that's central bank dealers range, and my application of it in this circumstance. So yeah, I want price to dip over the Sunday open, sell from above there, and then hold on all the way down to here. There's my stop loss above these, above the last swing high, previous swing high. Obviously it might not happen. This is just probability, right? I'm gonna probably shut up now, but you get my point, and that's why I changed my mind on from my bearish stance to my bullish stance. Thank you for listening, Aiesha, honestly. And anyone else who's watching and understands what I'm saying, I'm glad you're here with me, because this level of like analysis, it goes unheard of. It goes unheard of because everyone's always putting how like easy, like, yeah, I don't know. But yeah, that's my analysis. There's probably other factors as well that can make me bullish. I'm not even recognizing this swing low here. Price took out that, so now I'm looking for highs. Like, it becomes really clear to me. But yeah, I'm gonna leave that at that and see what happens. I could be completely wrong, or could be completely right. But yeah, man.